If you're a crypto holder out there and you're just wondering, how in the world did we get here? Is this normal? How bad is this bear market? All we have to do is dig into the data. This video is for you. This video goes over a tool, my favorite indicator in all of crypto that I've used over the years. It is a Fibonacci retracement tool. And this video that you're about to see is unreleased video from an unreleased course. And this video I recorded a few months ago when Bitcoin was actually above a very key area on these charts. So this video that you're about to see encapsulates and truly demonstrates the power of the Fibonacci retracement tool. And it shows basically how I use it. So I hope that you enjoy this video, and I hope that it offers you some value in this crypto bear market. Fibonacci retracement, the Fibonacci sequence. You hear me talk about it all the time. If you watched my videos, it is one of my favorite. I would say it is the most powerful tool that I've used in my investment approach in crypto. It has helped me the most. It just really has. And you can go back on years and years of videos that I've done. I've talked about this all the time. I've talked about areas so often, and so often crypto has fallen into these areas, namely Bitcoin historically has fallen to these areas or broken through these areas as these signs of confirmation. This tool, I cannot stress enough how important it is. And I know it sounds weird. Fibonacci sequence, Fibonacci retracement, mathematics, like it seems confusing. I'm not the most mathematical person at all. Actually, I'm really not mathematical. I don't have that type of brain, but this tool is probably the simplest tool. And I've made it even more simple. So to visualize, let me just chart a Fibonacci. This is how you chart it. You go over here I'm on TradingView, you grab the tool and you take a swing low, in this case, to a swing high. So 2018 bear market to the 2021 bull market high. And this is a Bitcoin chart. And there's a Fibonacci. It's charted. It's placed. Now, in a typical Fibonacci, if you go to TradingView and you load this tool, you're going to see a lot more lines. You're going to see a lot more colors. I've kind of just customized mine to only include 2 lines. It's a 618 line that you see, and it's the green box. It's a 618 line up here, and it's a 786 line down here. And all it's saying is from the swing high, it's 61% or so down, retracement, and then 78% down, or 78% retracement. That's all that's saying. It's very simple. Now, before we dig into this, and I want to show you examples of this working, and it's so powerful. It's very exciting. I want to discuss Fibonacci. So this is an article. I'll put a link here for you in the course. You might think that the creation around us is rather random, but that is actually not correct. There is a particular pattern in much of the creation around us. The Fibonacci numbers are a group of numbers arranged in a pattern that a man by the name of Leonardo Fibonacci discovered during the Renaissance. He found out that many of the objects and concepts in nature, from flower petals and DNA molecules to lightning bolts and spiral galaxies, follow this pattern. Many of the attributes of God, primarily that of his organization, can be seen in this concept. This stems back to creation, and you look out the window and you look at things that are in nature and God's creation, and you see this. Now moving over here to just historically, architecture, back in Greece, right? The Greeks and the architecture that they've designed, you find Fibonacci and you find this mathematical sequence there. Modern architecture, you can see California Polytechnic Engineering Plaza, right? You see Fibonacci in here. And let me just zoom in what it's referring to. You see Fibonacci sequence there. Going over here to music and other things. The Fibonacci sequence and the golden mean reveal an extraordinary phenomenon that occurs throughout nature, art, music, and mathematics. Also known as the golden rule, the golden ratio, or golden section. The golden mean is a mathematical ratio that artists, architects, and musicians have used to craft their art form for centuries. Can I add to that? Not only mathematicians and artists and musicians, but technical analysis people on YouTube. And it works. So that's a very brief overview. I'm not going to get into the mathematics of it all. It gets quite deep, but it is this repetition. And oftentimes when I track the Fibonacci and we look at it, I talk about, and especially if you zoom out on a Bitcoin chart and historically, and you see these Fibonacci areas playing out so consistently, I talk about how there is this repetition. There's Bitcoin moving to these areas because there's a very human element to this. It's humans. It's human beings that are behind these charts. And human beings like symmetry. They like to see these types of formations and these drawbacks. And that's, I think, a huge part of why we see this happening. So let's look at this in real time, right? So the Fibonacci retracement, and I actually, before we even look at this, I do want to note something. From the data that I've studied in terms of Fibonacci, and you can use it on all different time frames, you can use all different retracement lines. From the data that I've studied, especially on the macro, it's the 618 line and the 786 line that are the most powerful, useful data points of the Fibonacci. Now, the 786 line, as we kind of dive into this, is the more volatile line. And I think this applies very well to crypto because crypto is so volatile, meaning the rule is already volatile to get there. And you can see Bitcoin falling to it actually right now on the chart. It's a very volatile rule, but even more so, once it breaks the rule, then we really start getting some confirmations. So that's what I want to talk about. I want to first start with this clip. I showed it in another previous video in this course, but it signifies exactly what I'm talking about. This is October 2020. We've come a long way, everyone. And now, as I do this video, Bitcoin knocking on the bull market doors. Bitcoin knocking on the bull market doors, everybody. And this is what the chart looked like back in October 2020. So we're going to do this. I'm going to get rid of this Fibonacci, and we're going to look at this from both angles. This was the bull market doors Fibonacci. So this was a swing high from a swing low. So bull market high to bear market low. And you can see this Fibonacci right here, green, a 786 and a 618. It's a green channel that you see there. Now, in the video, you can see Bitcoin had not yet broken through those bull market doors, but the confirmation for that parabolic move was getting close, and this is how it played out on the Bitcoin charts. Bitcoin broke the bull market doors, and very soon after, it broke previous all-time highs and went on to just enter that parabolic move in the bull market, and altcoins performed so well during this period of time, and that's why Bitcoin is such a foundational chart. Whether you're accumulating or not, it's foundational to track because these data points are so consistent in terms of helping roadmap and just kind of helping us visualize these bullish and bearish confirmations. So in this case, it's a bullish confirmation, Bitcoin breaking the bull market doors. You see it happened, and that was it, everybody. That was the bullish confirmation that something crazy was about to happen. And it did, and you can see it, right? So Bitcoin was knocking on the doors. There's Bitcoin breaking those doors and entering the bull market. That's one aspect of it playing out. And that was a resistance. The bull market doors was a resistance area. We wanted to see Bitcoin enter and break above, and it did. Now, on the flip side, and you hear me talk about this one all the time, we have the inverse of that, which is a low to a high, right? So the swing low of the 2018 bear market to the 2021 bull market high. Now we have a retracement. Now, this playing out right now as I record the video, we're gonna have to continue tracking this as I record. I don't know how this is gonna work, how this is gonna play out. You will see in due time, depending on when you're watching this video. But check this clip out now, and this is from December 2021. Bitcoin is trading at $48,000. Let's watch. I'm prepared for all scenarios at all times. If we get a macro bearish confirmation, definitely going to just start tracking it, start talking about it. And it's getting very close. And what that looks like for Bitcoin to the downside is this. Swing low of the last bear market low to this previous bull market high. And this is what we're looking at. So it's a very similar Fibonacci 786 to 618 range right here. And it's in that $28,000 to $17,000 range. And in that whole area is accumulation zone, on the heavy accumulation zone. Below that 786 is just ridiculous. Not even sure it'll get there. We're in a different environment than we were last. As I do this video, we're in August 2022. That was December 2021 at 48,000. Here's where we are now, right around $20,000 Bitcoin, and Bitcoin fell all the way down. And in that video, I said, I don't know if it's even going to get below 17,000 or in 17,000. You can see Bitcoin, it fell to this area. Now, in hindsight, I don't know if I've actually even reached my heavy accumulation. And this is a good example of how things change as markets progress and move. I've been accumulating crypto, but I am still waiting and as we watch the world and we watch right now, as I record this video, there's a lot going on with inflation and rising interest rates and all of these different moving parts. And I think as we watch this video, as I record this video, there's still potentially more downside. So I've even adjusted kind of my approach to these macro charts. While I'm accumulating, I think falling below the 786 line is still an important area that I'm anticipating. There's no guarantee it will happen. We will see in the future, looking back on this video, but this is a great application of this data playing out. When I recorded that video, we're up here close to $50,000 and Bitcoin has fallen all the way into this Fibonacci retracement. And this is another good example on the flip side of Bitcoin utilizing the Fibonacci area. Now, Bitcoin fell below the 786 line back here, and it was a great accumulation area. And this is a piece of data that I'm using in these charts. I bring up just past videos that I've done, really, and I do it in my YouTube videos sometimes as well, but I do it as kind of a teaching tool, just so that we can all really get a reminder to see how consistent these indicators are. And in this case, the Fibonacci retracement historically on this Bitcoin chart has held up so well. And that is not to say that there's a guarantee that it's going to continue performing so well, but I can say it's held up so well that I'd really be remiss not to continue using this tool on the macro and tie it into my macro plan, right? Now, when I recorded that video and Bitcoin's sitting at 48,000 or, right around $50,000, there's something to be said about saying, Bitcoin might fall to $17,000. It's not the most popular thing. Emotionally, it's not the thing that feels right? Bitcoin's just hanging out all the way up there. It almost doesn't make sense to talk about a $17,000. Talking about a $17,000 Bitcoin makes it seem like Bitcoin must be failing if it's falling that low. But if you put aside that judgment and you put aside the emotional aspect and the emotional thought that goes into that, you're left with one thing. It is realistic and it makes absolute sense that it happened because this Fibonacci channel and this 786 line has remained so consistent over the years and over cycles for Bitcoin. And that's why I continue to use it. But this is how I apply this is how I apply technical analysis utilizing the Fibonacci retracement. This is how I apply it to the macro. You can use it on the zoomed in charts as well. Even more volatile of an environment on those zoomed in charts. Probably, I would say, I found not as consistent. It doesn't work as well as you zoom in on the zoomed in timeframes. But this is Fibonacci retracement, such a powerful tool to use amongst all of the other tools in the toolbox.